should do a market update.
Okay, let's do it.
Yeah, let me share my screen. All right, Sac County. Inventory is still going down, sis. Look at this. This is on a week-by-week basis.
That's so crazy. So how many right now?
Sac County is about 874.
Okay.
Everything else is still pretty stable, though. You know, you see the red lines,
Yeah.
the blue lines. You know, they don't change, but the inventory is going down.
Yeah.
Inventory going down is some homes are getting removed because sellers are not getting what they're asking for.
That makes sense.
And some homes are closing.
That's true.
Or pending.
That's true.
The blue line should be going up in order for this to go up. But because the blue line is steady, pending is also steady.
Right.
There's nothing to replace the home that's getting removed from the market.
Yeah. Okay, that makes sense.
Yeah, that's why it keeps going down.
And it's so crazy because I'm just thinking, okay, with the program that came out and everything like that, it's great incentive for buyers, but if there's no inventory, I wish that they kind of like matched in mirrors.
This is what I see with this program coming out, Lisa. There's no incentives for sellers.
Yeah, exactly. And then that's the thing. It's like, even though the funding, we already did the math, right? It's going to be about 3,000 people. However, we're still stuck in that predicament where, well, what houses are they going to buy if nothing's available?
And what happens when they start to overbid again because they all like the same home and the appraisal?
Right. And on top of that, it's like you just skewed the supply and demand way over to demand again.
Yeah, what's going to happen? I mean, I guess there's new builds, right?
There are, and
are these programs going to work with new builds?
they're not 100% sure yet. They said yes, most likely, but not 100% sure.
See, that's going to be a good question right there to put in the queue, because then a lot of buyers are going to go towards new builds.
So they say that they're going to give them all the closing cost credits and everything like that, but for a down payment assistance.
You can't.
You can, but there's only so much that you can do. So we'll see.
Not only that, they're going to push for their in-house lender, right?
Always, yeah, of course, because they have to make money off of everything.
Is their in-house lender going to push them away from this grant, 20% grant program, and use a traditional financing?
Because, you know, the big lenders and everything, they're not registered for this. And because it is limited, if they know and they did the math the way that we did, they may not actually do it. Just, it's like, okay, well, if it's going to be gone in a month, do we really want to do this? And that's the thing with new builds too, what I'm sharing. By the time you actually get this house, the program may not be available. So we have to plan a plan B for you.
That's true. That's true. I didn't even think about that.
And you have to think of plan B as your true plan A. And if it's still available and it still works for you, then that's gravy, that's dessert. But that cannot be your main course. Just as long as you have a plan B, you should be fine.
So this is from last month. Look, 60% decrease in inventory. New listings, 14% decreased. See, sold home went up 10%. Pending home went up 1% from last month. So this is one of the causes. Actually, 3 of these is the cause for low inventory. Look, from last year, 30% decrease.
30% from last year. That's crazy.
So last year, it seemed like we didn't have any inventory, remember?
I mean, it's been like this since at least 2020. I'm way before that. I'm just thinking it's been like this for quite some time. At least 5 years,
yeah,
huh?
And look, and this year is worse than last year. For almost 45% decrease in new listings from last year, same month.
So here's that age-old question is now a good time to buy? If supply is continually going to do this downward trend like this, if you don't get in,
price is going to go up again.
Yeah, well, not only is price going to go up, it's just if you don't get in, even if price is high, people are like, think about it. What if $500,000 home becomes a $2 million home? Because that's what happened in the Bay Area. It's not like it's not going to happen here. It's just a matter of time. It might take a little bit longer. So when that happens,
True.
If you have a mortgage because you bought the house for $500,000, now your mortgage is $400,000, your house is worth $2 million. Even if you sell it, great. You put it all on your next house. Okay, you buy a $3 million house, sure, but now you have a $1 million mortgage versus a $400,000 mortgage. So people are going to consider those numbers.
Right now, a lot of sellers that do want to sell and upgrade, they have a high 2% mortgage rate.
So what ends up happening? They take out a home equity line of credit, or they do a full cash out refinance, take that money and get their next home and rent this one out because they don't want to miss out. And it's almost like, well, I wasn't thinking about that before, Lisa, but now I will.
I think that's why it's good to go over all of this, right? Because this is from last week. This is from last month. This is from last year.
So let's address all the people who are saying the sky is going to fall, economy is doing bad, inflation is not great, interest rates keep rising. So
the data.
This is just numbers. It's not attached to anything out there. And can it be? Yes, it can be. It can be. There's a possibility that when people look at their mortgage and they compare what's out there for rent, they're going to be like, okay, we need to squeeze tight. I already have several of my my borrowers who already have a house and say, hey, I'm in a tight situation. I just got laid off and everything like that. And I've moved the kids into my room. So I am renting out the other 3 rooms. Do you know anybody that needs a room? Things like that. So people are getting more creative for that because they'd rather.
Do you see this happening more in the Bay?
It's funny because I don't think anybody in the Bay Area. It's very rare that anybody actually has a real garage in the Bay Area because usually it's converted into their room to rent out.
All right, well, let's go on to the next. Average price per square foot. See, it's pretty stable week on week. You know, it's still in the $300 square foot range. I mean, it's down from last week 1%, but look, it went up from last month almost 4%. It's down 8% from last year, you know. And then right here, days on the market, it's going back down again. Well, it's pretty average, like 40 to 50 days-ish, you know. And 98% of sellers are still getting what they're asking for. So week over week, you know, 12%.
Yep. So for everybody that still thinks that you can lowball an offer and everything because it's quote unquote slower. I just had somebody just ask me right now and say, hey, since it's a little bit slower, I was like, okay, it is a little bit slower only because there's not enough inventory, not because there's not enough buyers.
That is exactly what it is. So it feels slow, right? The synergy just feels slow. That's all it is. It's not that it's slow, because look at this. I mean, some homes are still going pending within like 7 days. Recently, I started noticing like some homes would be gone within a couple of days now, pending.
I mean, I've been asked to help out with open houses and everything. And then what ends up happening on that Friday, they cancel it because it's like, hey, we already got a really, really great offer. So I was like, okay, that's cool.
So
I get a free day.
I think the reason why that's happening again is because inventory is going back down. Like what we were looking at earlier. There's no inventory.
Yeah.
Even though rates are high, there is no inventory. There's still buyers. Might not be that many buyers, but there's still buyers. And that's what's going on.
So the interest rates are higher. However, it's still affordable. That's why. Guys, it's still affordable. So don't wait until it's no longer affordable.
See, and in last month, it went down. The average days on the market went down 3 days. Sellers still no change here. But look, from last year, right? We were getting 19 days on average, right? Because we were getting a lot of cash buyers during that time. 49 days right now. You know? And, I mean, look right here. Sellers, 96% of sellers are still getting what they're asking for. Last year it was 102. They were getting above, you know. But 96 and 102 is not that far off. All right. And, it's pretty steady. It's pretty steady, you know. Average sold price, average is still pretty steady. Look. I every time whenever I look at this, it's so funny. I love this because then that you see how the active price is super high, right? On average.
Okay.
But then the actual sold price is like steady. You see that?
Yeah. Oh, that's interesting.
Yeah, so that's what I like about this right here is this goes to show like sellers eventually want more for their home, right?
Of course. I mean, everybody does. Everybody wants to buy low. And and sell high.
Right.
That's the motto, right?
But reality checks, and they figure, man, no, I could only sell it if it's at market value because buyers aren't dumb, right?
Yep.
And then boom, this is what they sell it at. That's why the average is like this. I mean, look, 1% change, barely a 0.5% change from last week. Last month, active price went up 6%. Active price sold went up 4%. See? Last year, 11% active, 9% decreased from sold, actual sold. Sold is what's important because that's what appraisers look at.
Right.
They don't look
right.
at active.
Right.
So this is super funny to look at. Right, let me go to months worth of inventory so that way. Look, we're getting low again.
Ooh.
See that 1.3.
Ooh.
Look, remember last year in May?
Mm-hmm.
It was still hot, and then look, we're getting low again.
Ooh, okay. Look at that. Look at that in 2021. It was like 0.6. It's like half a month of inventory.
Yeah.
So if we have this high demand because of this program, it might go back there. It might go back there.
That's what I'm saying. And the price is gonna go up.
Yeah, yeah.
You know, so look. Last month it went down 34% inventory. Last month, 34%.
Wow.
Last year, we had 1 month worth of inventory. This year, same month, 0.2% more.
So Chia, again, remind our audience, what is a normal market? How many months is a normal market?
3 to 5 months worth of inventory. And look, we were there. We were getting there a couple months ago.
Almost, right?
Yeah, right when rates started going up last year after May. Remember it happened after May, right? See how it started going up? Everybody started pulling out their offers, started canceling, inventory went up, and then that was the same trend. It went up to 2.5% month worth of inventory. So this is what people were seeing, buyers were seeing, oh, I got a lot of options now. Because a lot of buyers also dropped out. During that time, we felt
Even
that.
when you felt that, it still isn't back to normal yet. That's why I'm trying to
It was
get
still
that.
considered a seller's
Correct.
market.
It's just less of a seller's market, right? It's deceleration, where it's like home prices are still rising, just at a slower pace.
That's exactly what happened there. And look, that happened right after May. See, data do not
Yeah,
lie.
that's why I like seeing
Right
it.
after May, when the feds raised it, how much percent it was, I forgot. And the interest rates just jumped to 5%. Everybody's like, what the freak? Everybody started canceling.
I know.
And the inventory went up. And then look, it's stabilizing. Everybody realized, you know what? We're going back to a stabilized market. Everybody started to resume buying again. Inventory went down a little bit. Started going up. Winter hit. See, winter hit. So inventory started going up. Everybody took a break. And then this is where we're at right now. 1.2.
If time didn't have a space or anything like that, right? All the people prior to that was like, dang, that's crazy. But look at the perspective now. Most people are like, dude, 5% all day. I'm going to seal that deal right now. It's just perspective.
Yeah, and like imagine, okay, we're almost a year back to May when all this started again, right? Everything started shifting because of the rates went up to 5%.
Yeah.
Imagine you would have bought during that time still and did not cancel. I mean, during that time, what home prices were what? Average sold price during that time in May?
Yeah.
Were what? 630? So 630, okay? So 630,000, okay? And during that time it was what? 5%. So if you were making payments, you already made them 1, 2, 3, 4, 5, 6, 7, 8, 10. You already made 10 payments towards your home loan. You already had some equity in it because you've been paying down your principal.
Yeah. You would have. You
Right?
actually would have.
The rates still came back down to where it was at during that time, which is right now is around what?
It's at 6.5 right now.
Yeah, so it's like a point higher than May.
Yep. I mean, 2 weeks ago we're teeter-tottering in the 7s, so
I'm sharing it to say, shoot, what if it happens again?
Don't miss it again.
What if you think
Correct.
what if you think right now is May?
Yep.
And then 10 months down the road, you look back and you're like, shoot, I should have bought when rates was at 6.5. Or when the prices were at 5.29 at 6.5.
If you're calculating everything correctly and you're budgeting correctly when you're looking for the home, one, if it's not in your budget, then see if it's a possibility that you can get less of a house. Do you really, really need all of that just off the bat, right? This is to start the game for you. In the event that the inventory continues to get low, 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 at least you got your foot in the door. We stressed this many times.
You gotta go based off of your situation.
Right, and that's the thing. Last year's people's May were regretters from the year before, and then the year before that,
Oh,
and
yeah.
the year before that.
So that's why they were able to pull the trigger, because they knew.
Correct. They already felt that pain the first time. So for all of you that felt the pain the last time, don't do it again. Don't do it for the second year. I actually have somebody
Right.
that's going on 5 years now. Guys, remember, if you're paying $2,500, which is the average rent in Sacramento right now, on a year, you've already paid $30,000. In 5 years, you've already paid 150. So if you're already looking at your analysis of whether or not you're going to buy, you just gave somebody else $150,000. I don't know about you, but I'd rather give it to you guys.
What I would say, buy based off of your scenario.
Yeah.
Before May, a lot of buyers were buying what they want. Afterwards, I've been encouraging a lot of my buyers to buy what they need.
Yes, I think that's a really, really important fact that people don't recognize sometimes.
How does that look like? Maybe instead of buying what you want, which is a 4-bedroom, maybe what you really need is just a 3-bedroom. Because think about it, right? If you were gonna go back to renting, would you live on a rental that was a 3-bedroom?
Yeah, absolutely.
Yes, you would. Versus a 4-bedroom, because the 4-bedroom rental is way more expensive than a 3-bedroom
Absolutely,
rental.
absolutely.
It provides for all your needs, and it makes you live within your means.
Correct. And that's the key thing. You said it right there. Live within your means. So it doesn't matter if you buy or you rent. If you do that, then you're going to be okay, right? But the thing is, you can't control what your landlord's going to do, whether sell your house
You cannot.
or raise the rent. But you can control the fact that, hey, when you're able to pay off your mortgage, you're never able to pay off your rent.
Here's
So
what's
think
gonna
about that,
happen,
guys.
too, okay? What do you think's gonna happen to your rental when this inventory drops back to 0.6? If it does. What do you think your landlord's thinking? The landlord is thinking this. I put you guys on a month-to-month. Now that it's a good opportunity to get high dollar, and the demand is there because inventory is low and I could sell, I'm giving you guys a notice to vacate.
Mm-hmm.
Where are you gonna go?
Mm-hmm.
You're gonna go find another home that is based off of market rent during that time?
So I've had quite a few scenarios that's very similar to this, Chia, where
That's what happened. Remember, during that time, that's what happened.
absolutely, and that's the thing too, guys. It's like, okay, you're getting a steal of a deal on rent right now. Totally get it. I have several people in that situation, but you do not know when that plug is going to be pulled.
Yep.
I don't know about you, but that would stress me out just because, especially if as a mother, and you have to move your kids right away, change their school, all the other stuff, and while working a full-time job too, that's a lot of stress.
Landlords are having you guys sign that month-to-month only for a reason. It's because it gives them the control. Their goal is to sell and hold on to that money and eventually buy more rentals when the market does correct itself to a lower price to where they could buy more properties and rent it out and repeat.
Yep.
An investor is in the business of making money. They're buying, and their business model is buying home to renting it out. So of course they're gonna jump on the opportunity, because during this time when it was below a month worth of inventory, that's what majority of all of our buyers were doing. They were calling us saying, "Hey, Chia, Lisa, my landlord is selling the home, so I don't want to rent. I don't want to keep renting because I don't know if that landlord is gonna sell too after we move in, or raise rent every month because we're on a month-to-month. So we decided we're just gonna buy." That might happen again.
Especially if you're getting a really good deal on rent, what the landlord is seeing is that, well, I'm not making a whole lot anyway, so I might as well just sell. If you're in that situation, you guys are the most vulnerable. And when they're selling it and they're buying another piece of property or multiple pieces of properties, now they're going to raise the rent of whatever the normal rent value is.
Like even now, right? We have people that reach out to it and it says that, "Oh man, my rent just went up."
It's unfortunate because there are great landlords out there. I mean, we teach you guys to be landlords, right? We teach you guys to to buy more houses and build your wealth with real estate. But again, it's a long-term investment. They're not going to make oodles and millions of dollars right off the bat. Some of them are only making 100, 200 bucks off of you every single month. So if they're not making a whole lot, you are the most vulnerable. So if you're paying a low rent, you are the most vulnerable. But at the same token, too, right? If they buy the next house, guess what? Investors actually pay a higher interest rate
Yep.
than regular. And they have to put a minimum of 20% down. I'm not even telling
Yep.
my investors to do 20%. I'm telling them, okay, in order for you to break even, you're gonna put in at least 40%. So they're holding off, okay? They're holding off, they're renovating, they're doing whatever creative way that they can do to make a little bit more. So if you're seeing more investors, I haven't had any of my investors buy a whole lot unless it's a steal of a deal right now, just because it is expensive for them. So going back to that, that is also the reason why certain investors was like, well, if they're doing well, they're not going to sell.
Hmm.
And that goes back to our low inventory situation.
So basically, if the shoe fits,
If the
just
finance
do
shoe
it.
fits, yes.
Yes, just do it because you're gonna have to pay a mortgage anyways. Might as well let it be owned by you.
Yeah,
Might
that's
as well let
crazy.
that mortgage be tied to you.
So you just mentioned that you're going to be paying a mortgage anyway. Guys, remember that. You're going to be paying a mortgage anyway. It's either your mortgage or somebody
Or the
else's mortgage.
investors.
But guess what? When you pay off your landlord's mortgage, you still have to pay for that extra, that rent.
You do. You still do. And like landlords are just human beings.
Yep.
And they have bills to pay. And sometimes we don't know why they're selling the home. Maybe it's because of the inventory. They want to take an opportunity of selling it for a high dollar. Or two, maybe they're behind on bills and this is the biggest lump sum money they can make. So they need to sell in order to pay for their debt. You know?
Correct. Correct.
So there's a lot of reasons behind why a investor would sell. And it's costing them headache because things are gonna break.
Yes.
You're gonna call the landlord to go and fix the roof, fix the fence, plumbing, all of this. That costs money. Now that cash flow is negative.
Right. I mean, just as you hear, there's nightmare landlord. There are nightmare tenants too.
Yeah,
So it's not always easy, and a lot of times you may be a great tenant, but their other house is not. So now, in
right.
order to fix up that broken house, like you said,
You have to
Chia,
sell
they have to
yours.
sell your house in order to cut the losses on the other house. It happens a lot.
You guys have heard me and Lisa share about a lot of these things, but the reason why we're bringing it back up again is just because if this is a trend,
Hmm. It's a downward. Look at
then
how downward it is. It's going to go
yeah,
back to
if
that 6 months. And I wouldn't blame it with this program. Oh my gosh, it might be like that next month already. So sellers, if you guys want to buy, please buy. I wish that there was a tax break for people and some sort of incentive for them too. Give it up to other people. Don't hoard houses.
it's gonna be interesting.